Stock market analysis, projections on the S&P 500. First, some important information. Please do read this slide that tells you about our approach to analysis and about when you use our analysis, what it means for you and how you should do that, and the concept of trade ownership, which says you should own your own trades, no matter what anybody says. One more thing before I get into the analysis. This week, we bring you our Level 4 Top Tier Special Trial for first-time subscribers and for people that are upgrading. This brings you everything that is in our Levels 4, 3, 2, and 1. It is unbelievable the amount of information you're going to get from us. Starting for Level 4s with our multiple time frame charts, our entire focus list of 84 symbols. You can import that, save it, look at it live on the TOS platform. We encourage you to use Thinkorswim platform, but you don't need that with everything that we bring to you, and you can certainly move the analysis onto whatever charting platform you like. You get our proprietary studies on there, the Slim Ribbon PO, Reversal Scout, Market Condition Indicator, Option Bias Indicator, all of those that we develop that help our traders immensely. You can import, save that all live on the Thinkorswim platform. You will get our custom grids that allow you to look at basically any symbol using that special chart grid with our best indicators. Fantastic. And you're going to have full membership access to the MCM Pro and everything, as I said, in levels 3, 2, and 1. And I want you to go to the top of the askSlim page and look where it says a level 4 special, get 35% off. You're only going to pay $303.75 for this for 3 months. It's $101.25 a month versus the regular $159 a month. So this is, in those 3 months, you're going to get just a phenomenal look at everything that we bring to you, and you're going to love it. Again, go to the top of the askSlim front page, as you can see there. Yes, that's a picture of me holding my hands up, screaming in 1974 on the original trading floor at the CBOE. Yes, been at this for 50 years, and now I've shared all of that information, all of that training with my other 3 analysts here at askSlim, and fantastic information. Go to that level 4 special offer. There's more information there. And if you want to know more and get some information, or if you have trouble signing up, write to Matt at askSlim.com. Take this 35% off for everything that we bring you. You are going to be blown away by how this information just is fantastic for you as you approach trading or investing in the markets. Level 4 special, 35% discount. Go to the top of askSlim.com. All right, here's my analysis on the stock market. We're going to look at the S&P 500, the SPY, and we're going to look at our level 4 indicators, and then I'm going to bring you to the MCM Pro. That's our market condition monitor and our ranking systems. We're going to go in there. These are 2 fantastic applications that really give you a good sense for the conditions of the individual symbols in the markets, or the market as a whole, and especially in a time now where I think rotation is the word for the stock market. For traders, you really want to know what's strong, what's weak, get informed about that, and that's what's so important about these 2 applications that I'm going to show you. So let's take a look now as we look at the S&P 500. So this is SPY. We're looking at weekly, daily momentum, and the 2-hour chart right over here. The 2-hour chart, I have some cycle analysis on there for our level 4 members, so they're the ones that get the cycle analysis on the intraday. As I remind the level 4 members, they can ask for that. It's really interesting now. Let's maximize this cell right over here, and let's look further out, because what I want you to see here is the incredible cyclicality that we have here in the market. As I go back here to the end of 21, 22, back over here, these are cycle brackets. If this is the first time you're looking at this, you're going to say, what are those half moons, or what are those semicircles on the bottom? These are simply a guide to help us see the rhythm in the market, the average time frame in a particular symbol. Every symbol has its own time frame. And based on what I suggested, when you look at Arvy's video on the gaming stocks, earlier in the show, we talk about the principle of commonality. So there's a lot of commonality between the indexes as the cycle rhythm set up. Cycle rhythm being money flowing in, money flowing out, and the longer a particular cycle, the more dominant it is. So there are some minor cycles in here, and they don't have a lot of influence if the dominant cycle is fighting against them. In other words, in a very strong upward move, as you have right over here, these minor cycles don't give you much on the downside. And the slim ribbon, the reversal scout right over here, which you see, where you see that green arrow, that's where that turned up right over there. That tells you the strong upside momentum in the market. Now, you had no downturn here over there. You had no downturn here. This is in 23. This is in early 24. And you had no downturn over there. So the depth of the minor decline wasn't much. Here you had a downturn in the reversal scout, and it was deeper right there. Here you had a very big early downturn, and that was a very big decline with two minor cycles negative. But if you look here, minor cycles both positive, both positive, both positive. Now, when you look at this one, this was that yen crash and the crash in the Japanese market, and that brought it down close to the 78.6%, which got me more negative. When then this comes back past the 78.6% on the upside, and then we have an upside turn here, then it tells me that, well, I was overly bearish and this was an anomalous downside move. Let's talk about where we are right now and these particular conditions on the intermediate. This is looking at the weekly chart here. So we have us in this minor rising phase. And because it rallied so strong, it tells me that the dominant phase is still rising. That has me looking at, well, I talked earlier in the show about the extreme valuations and the potential upside. So to me, the potential upside is limited based on valuations. However, based on the overall analysis, it says to me we have to still be looking to the upside. And that says to me that somewhere in this period here, and I'll show you on the daily chart where I think that rallies to, you continue to move up. Resistance being at the old high on SPY at about 565. So we're only some 4 points from there right now. The bottom of this fib extension, which is at about 567. So that's a pretty narrow range there, and that is where the lowest track is, as you can see. Now there is an upper track in here takes you to this extension, which is 100% extension. In other words, what that means is that the length of this rally, the magnitude of this rally, not the length, the magnitude, will match the magnitude here if it gets up to that level. That would be 582. To me, that is the outside of where this rally can go if it really manages to get legs. That would be about 202 or 203% valuation of the stock market to the GDP. That would be a huge extreme that it has never achieved before. But again, never doesn't mean it will never do it. We could get a rally up to that level if it is especially driven by a rotation. That could happen. Here is your period of risk right in here. And now I want you to go back and look at those periods of risk as you look here. And you can see in every one of those cycles, the declines are pretty strong. You have some that are bear markets and get you down, over 20% as you see over there. And you have some that are just intermediate corrections that are basically, 6 to 15% to the downside. So right now, because I've upgraded this from where I had it, because the market told me to by the strength, I have it projected to the period of weakness coming in here, getting it down to this level sometime pre-election or after the election to about 514 to down to this level where it made down over here where the 78.6 is to 509. So let's just say 510, 515 on the downside. that would probably be, somewhere between, 9 and 12% to the downside, depending on how extreme it gets. That wouldn't be that rare. In fact, it would be quite normal. And this is that period of risk. As you can see here, in all of those cycles, they come and the market falls. And now, as we're getting up here to this extreme level, in my opinion, the upside is quite limited. So, I see a potential, if at an extreme it can rally another 2-3%, compared to just on the intermediate phase here, down about 9 to 12%, I'll make it 3 to 4 to 1 negative risk reward based on the magnitude of potential declines that we can see in here based on the weekly chart. Now again, we have an upward turn here in momentum, and I will show you that upward turn again as we look at the daily chart and some of that momentum. Another key thing to see is that generally when the market breaks, it gets below the 34-week moving average. This one did not. It was a very strong translation, as you see there. And most of the time it will get to do so. So you can see where that's moving up right out over here. By the time it gets into this period of risk, it's at about 532. So that's only 28 points down right there, a couple percent, few percent. So that's not that big of a decline, but still, that's probably a best case for that decline. But I don't see it being able to hold up that much. So let's take a look here as we switch over to the daily. And again, we are looking at cycle analysis. So look at this cycle in here. You've got this breakdown here. When it got underneath this support, it just collapsed, influenced by Japan. Now, when we look at those cycles, you can see how clean these are in here, and you can see the slim ribbon right there. Excuse me, I have a cough. And here's where they turn negative right here. You had the reversal scout turn down, and that gave you a good advanced lead to the fact that the market was going to make a peak in there. Now, if you look at this cycle looks like these over here. So you can see this is translated to the peak way on the right side. That's a right-hand translation. Translated to the peak way on the right side. This one was slightly on the left side, broke the low. So you can see how different these are here. And here you could see momentum still strong on both of our momentum indicators, the reversal scout and the slim ribbon, as you could see there. That gives you a good sense for the strength in the market. And look at the shape of this as the peak comes on the right side of the cycle. That is right-hand translated. When you get a right-hand translation, it only leaves a brief time for a move to the downside. This points to a move to the downside, plus or minus, I'm just going to duplicate this so you can see, plus or minus about 3 bars. So somewhere in this time frame right over here is where this trough is likely going to be. The midpoint over that is 9.9. We pegged this midpoint exactly as I called for that 8.5 trough right there. Now we're looking at around 9.9. It's, really about somewhere around 9.6 to about 9.12, 9.13 is where this trough is likely to come. So the probabilities of a pullback in here are high, but it's only minor, and maybe only to this 23.6%. That gets you to the next rally right over here. Now that tells you that, the conditions are such, because these are all positive, everything here. I just told you 3 positive things. I'm going to tell you a 4th one, and that is down over here, our option bias study. This tells you how to direct your option positions. The reason I developed this is because way back when I'm a trader for 50 years in options, and also when I was, doing a show on Tasty Trade, based on option strategies and so much of that talk of options, I saw traders getting run over by the market in their option position. So I wanted to develop a study that helped you avoid that, so you wouldn't get run over doing butterflies or negative positions when the market was positive. And here it is positive again, telling you bias your positions to the long side. So that's 1, 2, as far as this shape goes, as bullish, and momentum conditions as bullish. That all says to me that when you get a minor pullback in here, then the next rising phase is likely to get above these levels. And then you start to run into the resistance levels that I talked about here on the weekly chart. Looking here at that past high, somewhere around 965 to 967, right in there, or an outside of 982. That's this rising phase right there. Then as you get into this mid-September period, you get into where that influence from that period of risk starts to set in, and then you worry about what would be when you would start to get the influence of those longer term patterns to be pushing to the downside. The way that I will know that will be wherever this anchor point is or low. After this rally, can it break down and get below that low? Will it hold a positive momentum or will it go to negative momentum? This period in here will tell me about those conditions. Right now, the conditions positive. Let's look one more here as we look at the the daily momentum conditions using a different version, a different way to see the slim ribbon right in here. Now the slim ribbon is a free indicator that you can get on multiple charting platforms. So I really want to encourage you, not all of the platforms give you the area charts to look at like this is, but it screams at you. And when you're in a green area right over here, and our level 4 study, the slim ribbon PO, gives you these arrows, it's telling you momentum is resuming to the upside, that the market is still strong. Here's where it turned negative and gave you the signal that the market was resuming to the downside, and you see how valuable that was. And look what's going on here as it just turned up again, and it tells you momentum is super strong. So this is, these are continued reasons to believe right now, if a decline comes, it will be relatively shallow. It won't last long. And again, we're looking into this time window between 9/6 and 9/12, 9/13 for this corrective process to end. Just like this did right over here, just like this one did right over here, and then each of those followed by higher highs. That's very, very likely what we're going to see in here. If you get a break in here and it's a little deeper and you get a rally and you can't get up to the high and then you get a break again, it will scream at you that the peak is in. But in the meantime, we have to look at it being positive. In the beginning of the show, I talked about speaking to investors and the crazy valuations and what the risks are, and speaking to traders. And right now I'm speaking to traders, people that have holding periods of days to weeks, and this is all positive. Take a look here at the 2-hour, and here's one more indicator in here, which is the market condition indicator. And when it crosses up over the 25 right over there, it is positive, and you can see that gave you that positive signal, and the market condition remains quite positive looking at that. This is a 2-hour look at the slim ribbon, and if you use these combination of indicators right over here, you can see just looking at that here's where it gave you the positive signal right there. And if you're an intraday trader using this for your position sizing or directional bias in here, this is just screaming in here that you have this upside powerful move, and you would want to make sure that you were on the long side during those periods. So that's a look at this grid right in here with our proprietary indicators, which just gives you a fantastic way to look at this. Matt has a variation of this that he gives to our level 4 members, and if you're a level 4 member and you want this particular grid, I'll be glad to send it to you. Those of you that are potentially going to be new level 4 members, then you can ask for all of these grids. Also, we make them quite available to everybody. So that is a good look at my analysis of the S&P 500. Again, short term, intermediate term into September, looking like a pullback coming and then a pretty good rally. But then further out, intermediate term, late September, October into early November, there is a lot of risk over there, and I don't know what the size of the decline is going to look like, but I'd say at least 9%, 12% or more based on what I think the conditions are out there. Overall, looking at valuations and many, many other factors that I think are going to negatively influence the stock market. All right, so that was a look at that. Now, I want to bring in some very important information as we look at our market conditions monitor. This is a phenomenal application for our level 3 and level 4 members. The Pro goes to level 4, and you can get a great sense for market conditions in here. So I'm just going to scroll this down and get a look here at the indexes in here. And this is the intermediate setting. So you can see based on what your interest level is, where you're interested. Are you an intermediate trader, for longer term holdings? Are you short term, looking at a number of weeks out? Are you near term, which is for like swing traders over a few days, or intraday? This is where you get fantastic information. And using the Notify right over here and downloading our alert app, you can get alerted on all of these conditions in here. So you can see in here for the intermediate term, the SPY is very bullish, and we showed you those conditions that are showing that it's bullish. The QQQ, the NASDAQ, is only slightly bullish, and this came from neutral to slightly bullish on 8/20. So the last 10 days, the last week and a half trading weeks, have been at slightly bullish. Now you get very bullish for the IWM, which has really turned strong a week ago, and very bullish for the Dow, which is way back to August 16th when it gave you that intermediate reading. So let's just take a look here at the short term, because most of our viewers are very interested in the short term. And you can see in here what we have in the short term is kind of neutral conditions, as we've seen the stock market consolidating sideways, not able to move up because, well, valuations and resistance, and not able to move down because, well, there's buyers out there and momentum is strong. So that fights against each other, and you get neutral conditions. The money is flowing from the big caps into lower caps, mid caps, value, and that's why these are only neutral. But when you look at IWM, it's bullish. So this is kind of a tip-off to you that if you're a trader, you really want to look at this all day long and say, well, which are the ones that are bullish, which are the ones that are bearish, and get a good idea. The Dow stocks, made up of a lot of value, is very bullish, and that just turned very bullish in here yesterday from bullish. So, and then on the right here is the change log, and it tells you about all of those things. Let's look at the trade setup conditions for a lot of other things in here. Let's just look at maybe the top 5 or 7 in each one and get a sense for what we see. So here we look at here, let me just scroll down a little bit for you to see. This is a look at the ones that are very bullish in here, looking at the short term. XBI, Walmart, utilities, Goldman Sachs, XLB, CIBR. Those are ones that are showing up as very bullish in here. And let's take a look in here. In a moment, I'm going to look at the intraday, and you'll be able to get a good sense for how to use this. And you can see these stocks that are in the very bullish category right over here. And now let's just switch this up and look at conditions here that are very bearish. And you can see Baidu, Mexico, LVS. Now, the gaming stocks are reviewed. The hotel gaming by RV in the beginning of the show. So go back and watch that, and you'll see why LVS is bearish. Natural gas, we know, is bearish. BDO actually is showing up as bearish here on the short term. OIH, the energy driller stocks, win. So look at, there's 2 of those gambling stocks showing up here, and RV is going to show you why if you watch that in the beginning of the show. If you were an intraday trader and you needed this information, again, you can just look in here and you can see which of these are looking the worst, because again, we're looking at intraday trading for the purpose of trading the rotation potentially. So that gives you the trade setup conditions that are very bearish, and you can get alerted for when these things turn very bearish. And here you could see the very bullish ones that you see in there. So UUP is the dollar for intraday is now turning up. You can see that. JP Morgan, Uber, Oracle, these are ones that are bullish today, and soybeans actually having a good day, as you can see. So that's how you get that a great sense using this. So again, I'm going to go back to the short term here and just give you the trade setup conditions for the short term for the different indexes. You can see Apple there is bullish also. It's the first stock that comes in under that. So that's a look at the ranking systems. It gives you a good sense for how you can use this and really understand the market conditions for different time frames. There's nothing like this out there. This is phenomenal. Again, to get the pro version and to be able to get the notifications that get sent to your desktop, become a level 4 member. Take that special. Now I want to look at the ranking system. This was developed and managed by developed by RV and I early on, which I thought was very important. It looks at our 84 top traded symbols, the symbols that I know everybody pays a lot of attention to. And what we have in here is the different conditions: long-term, intermediate term, short-term. The intermediate term reflects the conditions of the intermediate cycles. And then we have the algorithms giving us what the outlook is, as you could see right in here. So Apple right now is slightly bullish. And it says that the technical indicators suggest that it's nearing the end of its rising phase. That's why it's P1 yellow, near the end of a rising phase. Short term still positive, and the OBI option bias indicator is positive. These are key reasons to believe that it is still positive, but nearing the end of its positive run. Now, if you wanted to get the weekly chart or the daily chart, you just click on these things right there, and it opens that up for you, and you can get the charts. That's all in there on this rankings system. One of the key things I want to show you is that built into the option bias indicator is a reading when something is at an extreme. And we have some people that have this just for this reading that look at it, and you can see in here that when it's N3, these are stocks that are very bearish. And if you wanted to direct your option positions, this really helps you a lot. Outside of some anomalous things that happens, or an earnings report, some news event, this really helps you stay in the right direction for option positions. And you can see in here what the market outlook is for these stocks. And again, Win is showing up right over there. Boeing, which is a neutral strategy that Katie shows you early in the show, is very bearish when you look at that. So I hope her neutral strategy has the proper timing in there as she discusses that. Now let's look here at the positive OBI and those stocks that you want to have your positions to the long side. And you can see that right in here. This is a level 3 or level 4 application, so I really encourage you to, especially if you're an option trader and you want to get the OBIs right in here. If you're a short-term trader, you can click on short-term right here, and it will tell you the short-term conditions as you have it sort there. Now, what I want to show you in the OBI that many people subscribe to level 3 just to get this are when there are P1 or N1 readings. There is a volatility condition that's built into the OBI. This uses multiple time frame and volatility conditions in the algorithm, and that tells you when something is bullish or bearish, or because it's reached a real extreme. In this case, you see XLI is bullish, overbought. And the conditions favor a potential short-term correction in a positive intermediate condition. This just reads it so well. Here you could see the Great British Pound, GBP, is in that condition also, and the US dollar versus the Canadian, is showing you that it is an extreme. Now, often there will be a lot of P1 oranges or N1 oranges in there, but right now there is only those 3. And that's a very, very good way to understand when it's time to fade a market with a decent risk reward. Not perfect, of course, but really good. Or if you want to know when something is super positive and you should bias your positions to the long side, well, then all you have to do is go here and look for those P3 greens right there. If you want to know when you should bias to the short side, go here and look for N3 greens. And those are the ones that really tell you the ones that are quite negative. You can see oil showing up there, heating oil, natural gas, all of those, and Boeing, Baidu, Disney, Win, light crude, all of those are telling you that your option positions should be biased to the short side. So I wanted to share with you the rankings so you could get a good look at that. There are, if you go down here and scroll, you'll see there are 84 symbols in there that includes all of the well-known different symbols that you might want to trade, the best option traded ones, and that this is just an amazing broad way to look at some of the absolute best stocks. There's your ETFs showing up right over there, and there is SPX, as you can see, RUT, and those showing bullish at P3. So those are in there. Also GDX, of course, bullish P3. And favors long side bias, and that's really, these algorithms are just so good the way they were built in there. So I wanted to show you the ranking system also, as it gives you this great sense for especially how to trade in a rotational market. And you get, between the cycle analysis I just shared with you, looking at the market condition monitor, looking at the ranking system, wow, do you have a broad way to look at the markets. Again, I want you to go to the top of the askSlim website and click on that level 4 special. There's information there for you to see more, or write to Matt at askSlim.com for more information.